All right, welcome back. Time now for Three Stock Lunch. First up, we got Nike. Higher on news that CEO John Donahoe will step down in mid-October to be replaced by company veteran Elliott Hill, who's going to come out of retirement like Tom Brady to take the helm. Here with our trades is Brian Vendig. He's president of MJP Wealth Advisors. What do you think of this? Let's start with Nike and your thoughts on it. It's up today, as you see, by almost $5 a share.
Thanks, Tyler. Well, I think this one's quite interesting when you look at the headlines, and that's why I look at this for myself and caution any investor to dig in, because with Mr. Hill coming back, you'd think it's got to be about the shoes, Tyler. But at the end of the day, I think Nike is a very expensive turnaround story right now. A lot of competition in the space, sales down in North America, declining sales from an e-commerce business, and between Deckers, Hoka, On. I think we need to see a little bit more from management moving forward before jumping in. So I would say sell on the news is the expression, and then wait to see what that pipeline of innovation is going to be for Nike as part of their turnaround story.
The shares are up, I hate to say it, but only 6%, and they've been such an underperformer. The forward PE is also still 28. Let's move along to Fedex now then, which is plunging after it missed on earnings and cut its full-year outlook. The shares are down nearly 14%, Brian. You picked this one up?
Yeah, Kelly, actually, I would pick this up because I kind of dug into the earnings report and I looked at a lot of things that we're mentioning. Now, first, investors are paying notice to the fact that full year guidance is down and down significantly, which is why we have a little bit of a pullback. But at the end of the day, if you take a broader look at the stock, it's actually had a pretty good run recently and has been outperforming some of its other competition. So it's a little bit of a mean reversion. But when we dig into it, we see that they commented that demand is still healthy, especially in the industrial and e-commerce space, and expecting a little pickup, modest pickup in demand. Plus, they have some cost and restructuring initiatives that might add to savings to a tune of about $4 billion over the next 12 months. So I don't think this is an indication that the economy is definitely falling off a cliff, but also just that customers are being sensitive to price, something that we've heard from companies all throughout the year as we're going through a slowing economic cycle. So again, I look at this as a value opportunity and something that I'm looking to pick up for myself.
All right, our final name is another laggard today. Lennar, the home builder, actually beat on earnings, delivered strong commentary, and CEO Stuart Miller said the company expects demand to remain high amid a chronic shortage of homes for sale. What's your trade on Lennar, down $9 today?
Yeah, this is another value play, I think, Tyler, where I like the pullback here as a good entry point. We're seeing demand still in the housing sector, forward PE that's very attractive. And right now, again, a stock that's had a good run, investors just being a little fickle on margins that were weak, but we still saw increase in orders, deliveries, and revenue growth. And I think that macroeconomic backdrop with a decline in interest rates is going to help the stock moving forward.
All right, Brian, thank you so much for being with us. Have a great weekend, Brian.